And the news is out there. And the numbers are, as you can see, we've got that's the bond market. That's the price of the bond. Oh no, you can't see that. We have the stock up. Let's do this. Good morning. This is Doc from North America. Good morning, good afternoon, and good evening. It's Thanksgiving. Yeah, Thanksgiving. It's TGIF. Thanks goodness it's Friday, and at the same time, you can see. Oh, let's get that up there right too. There's Dukascopy on there. As you can see, the price of the bond is going down. What does that mean, traders? We talk about it here every day. Means that the interest rates are rising. They tried yesterday. They tried to lift them. Oh no! More new jobs were added. 303. It came in hot. Hot, hot, hot. Yeah, they were looking for 200 and some odd thousand, and it came in 303,000 jobs added in March. March unemployment rate sits at 3.8. And so, why would you need to lower interest rates if people are getting hired and the GDP is going to be 2.5%, and we've got this enormous debt, and in other words, everything the government is trying to fudge, everything Mr. Powell is trying to fudge, is making it impossible to lower rates. But as I went on my tirade yesterday, it's like insider trading. Then Kakari, let me put his name up there. I always say it's the two K's. There it is. Kashkari, the president and chief executive officer of. Oh, you can't see that again. Right there. Came out yesterday. He must have been listening to us. He came out yesterday and he just went wild. He basically, Mr. Obama put him in. Since 2016, Kashkari served on the Federal Open Market Committee. The whole bit. He's been around. I think Obama brought him in 2009-10. But in the end result, Neil Kashkari, he's one of us. He's a trader. He's a banker, and now he's working for the Fed. He's in the Federal Reserve. He's the president of the Federal Reserve in Minneapolis. And he basically must have been listening to our broadcast, because he was like, yeah, next year, not this year, and only if inflation would show that it was actually going down. But we know that that's not happening. All it's doing is it's rising slower. That's the problem. It's rising slower. That's what it is. So, it's not going up 10% anymore. Or at least, let's put it this way. Larry Summers thinks it's going up 10%. Now you can see I have it up on the screen there. That's the intraday trading of the 30-year bond. And you can see that it has dropped from 118.4 or 430 seconds, either way you want to look at it, down to 117.4. We just, now we're at 117.5 30 seconds. Dropped the whole handle. Full point, and that means interest rates are rising, and that's what that's all about. And so it just goes on and on and on. There is no way to describe how lost we feel in many different ways as traders. I mean, as the old traders, new traders have no idea. You're used to the idea of the Fed put by Mr. Powell, and before that Mrs. Yellen, and before that Mr. Bernanke, who created QE. And so we have the QE put, and because of that, it makes for us older traders, we're totally confused by the fact that the government is now the buyer of last resort of stocks. I feel like Japan in some ways. It's very weird. It's we're not used to the idea that this has been going on, and so at this point, it's like wow, Okay. I'm hearing what they're saying about it all. Hmm. Okay, we're just trying to drink in some of the things they you know, are saying at this point. Right. We have an inflation problem, and they're saying, why would the Fed be doing that? The only reason I can understand is insider trading. I don't understand anything else. And that's the total confusion of it all. Let's see. Now from there, we're pretty much. You see, it's bouncing back a little bit. Let's take a look at the stock market for a second. Better yet, let's just look at the dollar index. There's the dollar index. Dollar index is ran back up to the 104.10 area again. Now this news that came out, the numbers themselves, basically have put a nice little pressure on it from 104 down to 103.95. That's the dollar index. Now the stock market, let's see what good old stock market's doing. Stock market, right from the first little drop of it, right there, that was a slide from 52.15 on the futures contract down to 195, and now we're back up again. These are, there's a lot of robotic characteristics. In other words, people say, okay, they're hedging this against that, and so the computers kick in on these funds, and they all went to have the same type of concepts of investing. So you see this stuff. Janos did a webinar or two on it years ago, talking about how to trade with was it the fundamental news and information coming out, and it was a very accurate way of looking at it in the sense that he actually measured the difference between before QE and after QE, and that's one of the honest conversations. Matter of fact, that should be the title today. That should be the title, since yesterday was, I forget what it was, but it was probably insane because I was freaking out like a lot of people in the financial markets were freaking out that have been around a long time, thinking, what in blazes are they thinking? What craziness do they got locked in that head of theirs that they need to do this stuff? But anyway, so what did I say? It was a QE, trading a QE. Let's see, how did I say that? I need to write that down. That's so good. I want that. Me want that. Anybody remember what I said there? let me go to the chat line. I forgot. I don't have the chat line up yet, but I want that. Anybody know where I put what I said? I can't remember now. I got that MIT thing up there. They came up with some new ways of looking at neutrinos. It was fascinating. Anyway, let's forget about the physics. Doc's moving away from the physics. Let's have not a conversation on physics here. What was it? It was something about trading on news before QE and after QE. Sometimes, oh wow, there you go. Janos is there. What did I just say, Janos? Oh my God, I can see the trade. Hey, Robin. Hey, Janos. Here. U.S. releases employment data. The United States Bureau of Labor Statistics has published the country's monthly employment data to the release of buying the U.S. dollar and selling off other assets. Non-farm payrolls. Yeah, expected. Hot. 212 came out to be 303. I love that. Average hourly earnings were expected to have increased by 0.3% compared to the February. Forecast was correct, and the official unemployment rate remained at unchanged at 3.9. Officials revealed that the unemployment rate is at 3.8. Okay, so in other words, the economy's growing. And then what did I say? What did I say about your webinar, your videos? QE before? Oh, I know. It was fundamental trading. That's what it was. Was it fundamental trading? Trading, everybody would go like this. Trading fundamentals Fundamentals before QE. Yeah. And after. There we go. That's the title today. In my head, that makes total sense. Because, from yesterday's freak out with my brain, it was like, it was a very disappointing, analysis, or not the analysis. It was a very disappointing point of view by Mr. Powell yesterday. I mean, it had me like a raccoon, just like climbing the wall. And obviously, even we had some Fed chairs come out and say the same thing. I was like, no, this is insane. This is totally insane. So I'm trying to find what my title was yesterday. Anyhow, that's where we're at. And so that's the title for today. That makes total sense to me. And so before QE, we had the New York Stock Exchange and the NASDAQ, and we had fund managers running the markets. And then remember, we lost, 70% of the brokerage houses and banks in the United States. And the world did the same thing. They lost 75% of all the banks and the brokerage houses at the end of 2008. So, and we got Mr. Obama at the same time. What a joy that was. Oh, my goodness. So, because of all that, what we ended up in the end result is that we got the Federal Reserve as the replacement to all those banks. Remember, Merrill Lynch is gone. Lloyd's of London is gone. They're gone. They're in name only. They've been married off to some corporations. Lehman Brothers, Bear Stearns, Wachovia, I could go on and on and on and on and on. Santander and Bank of Scotland. It goes on and on. They're around still, but they're owned by the central banks now. They do whatever what they do is they allow it allows the central banks to basically manipulate the markets in a more touchy-feely way compared to the old days. Whereas before they would do overnight repos or stuff like that, and go on. It would happen every quarter of the year. In other words, it might go on 3 months out or 4 months out. Now it goes on an hour here and an hour there on a given day. It's the Fed is involved in the market 24/7 now, lending money to hedge funds and everybody else for free. It's to keep them invested and keep them steady and so forth. So. What it comes down to. Matter of fact, look at that. The stock market is now, higher than when the news came out because, hey, the buyer of last resort, the central banks are in there swinging away. And then the bonds have a harder problem of doing that. See, the bond vigilantes are not very controllable. They can manipulate the Federal Reserve, but they can't manipulate the big bonds themselves. They can get away with a little here and a little there, and there's a nice bounce going on, but it's just not that good. Doc, why are stocks moving up? Because the central banks are buying. And why do they? The bigger question is, why do central banks buy? Why do they hold the stock market up? And that's probably the better question. Why is the VIX going to hell? Because the Fed is selling it. The dollar's going up. The economy is strong. No reason for cut rates. Right, exactly. But the bigger question, actually, this could be a title too, but no reason for it today. We could make it Monday's title because who knows what the bozos will do in between now and Monday. The real reason, the real question is, why are the stocks moving up? The question is, why does the central banks in the world want the stocks to move up? That's the bigger question. All right. In other words, why don't they just let them bounce back and forth to the market forces themselves? And the answer to that is they can't. They can't allow them to march back and forth to the market forces itself. Okay. is too strong. Let's see. Okay, so the dollar's going up. The economy is strong. No reason to cut. I can answer that. The election is coming up. Well, that's part of it. That's the insider trading thing. Yeah, that is the norm, without a doubt. But it's bigger than that. It's bigger than that. But that right now is more the influence at the moment. That's that. People feel good when their stocks and savings go up, and they always re-elect the president. Right, that's so true. Powell needs Biden because Biden does not talk anything about Powell's policies. Oh, he does. They bitch. It's not really Mr. Biden. Mr. Biden is the front man. They have a White House of people that are directing the policies. I still recall 17 and early 18. Yeah, they were good times. You know, Mr. Trump. That's the problem. They want him in jail. That's they got to put him in jail. They got to find a way to put him in jail because everybody else remembers what you remember. How everybody had money in their pocket and the economy was growing and inflation was almost non-existent. For some reason, I expect the market to drop as the U.S. market opens. Well, 100 or 125 points or 150 points, even 200 points is irrelevant, really. Because think about it. We're up, the Dow Jones Industrial Average is up 126 points at the moment. That is 0.31. That's all that is. It's not even a full percentage point. And, back before quantitative easing, a crash in the market would be considered like I think it's like 6%, 5%. Now a crash in the market is 0.5%. They get all nuts. Market goes down, half a percentage point, and they are freaked out like as if they've been, their lollipop was taken out of their mouth when they just after the second lick or third lick. Honestly, the markets get incredibly nuts. The Federal Reserve cannot accept the idea of any negative news. When you have negative policies by the White House and the government, you can't afford more negative news in the financial markets. And what's easier to control, negative policies or negative news? Negative news, of course, because news is just words, So negative policy is, in other words, they don't care. They think they can basically win elections by, I guess what you would call physical techniques, For some reason, I expect markets to drop as the U.S. markets open. Well, they did drop. And they're back. And your video, you got it. I can't believe you erased those videos. You had some important factors in there that I saw over and over again that were very good about how to trade the markets on fundamental news. And what you identified was the fact the difference between quantitative easing times versus now. No, before quantitative easing. Okay? And so the market only went up about a third of a percent, maybe a little bit more. It was up 0.4%. Remember, if the market is down 1 full percentage point, the news media tells us the market is crashing. That's what they tell us. It's crashing. Okay? And your videos identified the difference in the nature of the market itself over fundamentals. I watched them, and I refer to them all the time. You know what? If we change the label on it, it should have been labeled before QE trading and like what I just labeled today's video. Before quantitative easing, trading fundamentals before QE and after QE. There's a world of difference. And one of the reasons is if you started off with how basically we've lost over 70% of the brokerage houses and the banks at to instigate QE, then that would have been different. I mean, maybe people would have started paying attention to it. Break it out and put it back. Let's kick that pig. Let's get that thing. Management, yeah, I bet management would not be happy about that. I see, Doc, nobody watched it. The content was not vile. Yeah, but they did not no good to me. Management just ignored them. Too little amount of views, no traceable income, etc. Yes, I know, but we should have them somewhere where I can post them because they're important. And that probably more than anything else is, what? With the central banks around, who knows? The ECB will probably call, Dukascopy and tell them to take it down. Remember, we're talking about the truth. In other words, all you have to do is look at the markets before QE and look at the markets after QE. They're two different animals. They're not even the same. One has 4 legs, and I think the other one has no legs. It kind of slithers. One has 4 legs, and the other one has no legs at all. So, yeah, they control the markets, and they make sure nothing else changes them. That's exactly it. That's what the ECB does. They keep your economy sideways. So that's where we're at this point. Stock market keeps on finding its way to go down again. Let me just show you that. We're back to before the news, right there. We should do this. We'll do this line because it's a short line. No, you know what? Let's do this line. Here we go. We'll make it yellow. Ooh. Huh. Wow, there's some news out about Bobulinski is suing Congressman Dan Goldman. Wow. Anyhow, that's where we're at. Let's see. Yana says ECB has prior local bank officials on payroll to keep them shut about losing independence in monetary policy. Yep, exactly. Second one is copy paste the Federal Reserve. Yes, just keep their rate at 2% below the Fed. Yeah, exactly. Exactly. And the end result is that we're a market now that's controlled by the central banks. It's been that way now 16 years, is it? Where are we at now? 24, right? And 8. So 16 years we've been that way. The central banks control. It's like 15 and a half years. It started right before Mr. Obama won the election, like the week before or 2 weeks before, something like that. And so, and the end result is that the markets anticipated what was going on. They slammed the daylights out of a bad situation. That's what it came down to. Mr. Bush warned them in 2005. There were all kinds of YouTube videos about Bush warning them that this was going to happen in 2008. No one cared. I mean, I don't have a big problem with George Bush. A lot of people do. He made sense a lot of times. No one even cared to listen. It's what he didn't do is the more of the problem. In other words, and he could have slammed the door and he didn't slam the door. But then again, that's the way it works sometimes. But at least he warned everybody, and I even seen the head of the Democrat Party crying on live TV with Maria Bartiromo that day, saying, I thought we did well. I thought we were doing the right thing. I can't believe I'm destroying the world economy. It's like, bingo. So anyway, what we have at this point in time, as you can see, the markets will stay firm. Everybody's happy. It's steady. People have bought who needed to buy. People sold who needed to sell. The statistics that they, the AI type of tools that they use to keep everything moving along, in a sense of their portfolios balanced, adjusting their gamma and so forth. Basically, those portfolio, and I wouldn't be surprised if we are down on the day. But believe me, if it's a 1% down, they get all nervous. It's a crash as far as they're concerned. It should be, like a 1% down day is just a normal everything day to me. Anyhow, let's go over to the currencies again now. This is a currency webinar, and obviously politics rules the world. Now, obviously the bonds, as I showed you, let's show you the euro. Let's go over to the euro. There's the euro. And let's see, where was the news? News was right. Here, let's move this over. There it is, right there. The news was right there off of that yellow line we're playing with. The news came out. They slammed the euro. When the euro is going down, the dollar is going up. And then we watched, it's hard to manipulate the currencies as much as the stocks and the bonds. Now, obviously, it's still down. The dollar index, let's see if we refresh that. Yeah, look at the dollar index now. Let's shift you over to the dollar index right there off of beta. There it is right there. It's reaching up. It's heading for that 104.5 area now. And so, currencies are harder to mess with, and bonds obviously are enormously hard to mess with. So they're big markets. The bond market is the biggest market in the world. The currency market is the second biggest market in the world. And then the stock market is nowhere near even remotely close. I think the next market, the biggest market itself, is a commodity, which is the oil market. That's the third biggest market in the world. The energy market, and then the fourth is the metals market. So, let's see, where do we go from here? Let's jump over to, and there is the dollar index from that news. Let's put that up on the screen. Right there. Right, there we go. So, what it comes down to is, a lot more dancing as usual, as usual. So, let's see. Can I do? Can I do this? Let's see. Let's see if I can put it up on the screen here. Let's see, where are we at? I just had it a few seconds ago. Oh yeah, there it is. There we go. Someone just asked me if I was up on there, and I'm sending them information. Sent site to your FB Messenger. Click on it, and you'll hear me. So anyhow, where are we at this point? There's the dollar index. The dollar index, and there we go. And so, all right, let's get over to the currencies, and we'll take a look at that. I'm done lecturing about the insanity of our central banks. Let's go to the daily right there. And there's the experiment. There's the euro. And you see the euro went into a buy a couple days ago. It's still in the weekly sell. It's just reflecting the weakness that we've been having. It's been in a daily sell from here. Went into a buy 3 days ago. They gave it a pop, thinking that they're gonna cut the rates. And obviously, it's still in that very odd situation where we're not really sure if you can cut the rates. That's the problem. In other words, I don't think you should cut them at all. But, the central banks want to cut them. In particular, Mr. Powell. Obviously, the regional central banks are even telling them, no, don't do that. You know what I mean? It's still going on like that. So from there, we look at the cable. Let's see how the cable's doing. Cable, and if anybody wants to see anything particular, let us know. We will show it to you. Let's see. ECB does second one. Copy paste. Let's see. Stocks bounce around with no clear direction. Yeah, right. Exactly. But the kick is not to let them crash and fall down. They want everybody's portfolios up. Dollar seems to have stalled at the 104.60. Yeah, it's there. And VIX appears to be recovering, which should move stocks down a little bit. And they have. Stocks are moving down a little bit. But, this is just background noise. This is really not that. This is just classic supply and demand by a few. The Fed will only allow them to get out of shape, so far. You get a half a percentage point in the direction they don't want, they straighten it out. And then, then later in the day, they may let it fall a little. Now it's the weekend. They probably want a headline that says something about the stock market being flat today or unchanged. So it'll probably try to orbit its way to there. So if they slam them down in the next 2 or 3 hours, chances are they will take them back up again. All right, there's the cable. Let's show you the cable. Show me the cable. There's the cable. And the cable, same way, 3 days in a buy. It's definitely in a weekly sell for a second week, and it's been over the last, since this high here, it's been in a sell it's been a buy 4 days out of the last 20 or something like that. Is that what it is? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 21 days. It's been in a buy, four of them. 16 days in a sell. And obviously, you see the pressure on all of it at this point. Okay. So then, me and Buckwheat, we go over to the Swiss. And there is the Swiss. And the Swiss is, back, still in a sell, but it's up today because of the noise in the marketplace. Yeah, and that's okay. Because they're doing a fine job in Switzerland managing the currency as far as I'm concerned. They recognized almost a year and 4 months earlier than the Fed that the inflation was not transitory. That's a winner chicken dinner right there. And so, that's been a pretty good thing. And you can see the Swiss has been in a weekly buy for 12 weeks now. 1, 2, 3, 1, 2, 3, 1, 2, 3, and 2. So if it's another third, it'll be 12 weeks next week starting. This is 11 weeks in a weekly buy. And it's gone not exactly in the wildest way. It's gone from the 85.5 area to the 91 area. That's all right. We can handle that. It surely isn't up at the 101 anymore. That's nice. And so, you're only looking at tenths and, eighths and not even quarters, compared to, say, when we get to the great experiment, we see that thing going like a rocket shot. You can see here's the yen. We're not exactly clear on what they're going to do with the yen. We just know definitely wear your life preserver if you're going to go swimming. That's for sure. If you get into the yen boat, wear your life preserver, okay? Because you may be going swimming. And that's exactly what I don't exactly understand. They seem to have drawn a line at the 152 area, the Bank of Japan, and they made that announcement about 2 weeks ago. And here we are. You can see it. It's banging against the 52 area right there. That's the 52 area. That is it right there. Matter of fact, that day there when it went to 151.97.4, they made that announcement right around in here. That's what gave us that thing that day like that. They said it there, and then about 3 days later, they made a challenge to it, and it didn't fall the same way like that one right there. And then from there, let's see where we got. Then it went up and hit it again, and again it fell there. We're not exactly sure how this is all going to play out, but like I said, if you're in the Japanese yen boat, wear your life preserver. Definitely. Okay. Now let's go over to the Great Experiment. An industrialized nation belongs to NATO, and this currency has lots of good action. It goes from 34 to 36 with no problem over a few days. Can you imagine the yen or going from 1.51 to like 2.51 in over a 4 or 5 day period, and then dropping back down to 1.51 again? Shot and stop loss. Let's see. VIX appear short it at put a stop loss. I would say that I would do what I call an option spread, a trapezoid, just like in the mathematical formula of a trapezoid, where you buy at the money, sell the two, like you go, like if it was a strike price, it'd be like the 152 call, sell something like the 152 and a quarter call, sell the 152.35 call, something like, I don't know. You make them almost equal distance underneath. So you buy one, sell one, and then you buy one way up above it. And so you're playing, it's like a buy right in a decay factor. So that's what I'm talking about. That's one way of playing it, because it doesn't look like it wants to go there fast, and I don't think it's going to act like the Great Experiment. In other words, if you did it with the Great Experiment, the volatility is like 350 or 500. You do it in the yen, it's probably trading at 15 volatility. When you talk about VIX, it's trading at 15 or 16 or 20. But if you did the same strategy in the Turkish lira, it'd be like 600 volatility. And so, but that's you want to turn it into like a wait and see type of thing, and then you can adjust the wing way up top. When if we go into a weekly sell, you make sure the wing is a couple strike prices further up than normal, so it's out of sync. And so, in other words, if you were doing it in a stock, you'd be like buying the 50 stock call, like the June 50 call. You'd be selling something like the June 55 call, and the stock. Let's say the stock's trading at 50. You buy the June 50 call. Sell the 55 call or the 52 call, and sell also the 55 call. And instead of buying the 57 call, you would buy the 60 call or the 62 call. But that's just an example, but they wouldn't be the right strike prices, because there's no way in the world I would do that with. If it's like a Bristol Myers Squibb, maybe I would. You don't want to do it. It depends on the beta of the stock or the underlying product itself. It's a formula, which I have in my head, and I can show it to you if you give me an example of a particular product to do it with. And so it acts like a buy right. It acts like a butterfly, and the risk factor is only what you pay in the end. So in other words, if you bought the call, say at 10, and you sold the next call at 6, and you sold the next call at 5, and so it's $1 credit there, and then you go and buy the next call for $1. So then you're not basically risking any cash. Now the question is, if it's the equal distance between each strike price, you're not losing anything. It's a free trade. It's an actual free trade. You do 500,000 of them if you want, because the worst you're going to do is pay commissions, and that's it. So it's a strategy. It's a straddle. It's a bull side straddle with more upside. It's a upside. It's a plus straddle, and it has, if you stretch out the top one instead of the 57.5 and you do a 60 or 62.5, it turns it into a more risk, of course, but you can adjust, because it has the two that you're short are decaying because they have more value compared to the if it goes up a little bit, and you've got the long in the money at that point. So it's a simple strategy. The brokers, I suspect, are behind all the writing of the options No, I think everybody's, there's everybody using them since they know that the retail newbies will mess up and the premium will be lost. No execution is likely. No, that's not true at all. No, no. The option market is one of the greatest markets of all time. It's the Option Clearing Corporation is the biggest bank on the planet. If people lose money in options, they're the ones that don't understand what they're doing. That's all. And the public is very involved in the options market. Let's see. I mean that their offer to retail in Europe, Doc, in Europe. I don't I don't know. I'd have to basically see what they offer, but I have not identified that as much. Honestly, I haven't seen that much. A poster in my. So let's see. Anyhow, someone just sent me a text. It was funny. I would say that options. Look, I have a perfect example, I guess, in biblical terms about options. Let me see if I can put it up on the screen. Let's see, where am I? I'm right here. So let's do this. I'm going to put something up on the screen, and I think that is the way I feel about options. And it's the way I feel about a lot of things. Let me go to it. I'm going to put it up on the screen in a few seconds here. Let's see, I go like that. And I'll find it. Let's see, where is it at? It's a really good one. And I'm scrolling to get to it. There it is, right there. Let's see, how do I do this? The statement, basically the statement is this. Let's see if I can copy this. Go like right there. Let's see, and compose. And I'm going to go paste. And get rid of that. Oop. What the heck? Let's see. All right. So, see if we can do this. Let's do this. I go like this. Let's see if I want to put it on something. Let me say it out loud. A rock in bad hands killed Abel. A rock in good hands killed Goliath. It's not about the rock. Okay? So it's not about the options. Okay? And so basically, a rock in a bad hand killed Abel. A rock in a good hands killed Goliath. It's not about the rock. Okay? And that is pretty much what it all comes down to in the end. Okay? That's exactly what it comes down to in the end. So it's not the options, it's the way you use the options. And so I'm not and how Europe or a retailer does it, that comes down to the retailer itself. In other words, options are a great tool. And to make it sound like they're not a good tool is very bad. In other words, are there good brokers and bad brokers? Sure. And I'm sure that there are good traders and bad traders. It all comes down to how you use the options. But to condemn the options because of a bad broker doesn't work. It's the same thing with Cain and Abel. Okay? A rock in a bad hand killed Abel. And a rock in a good hand killed Goliath. It's not about the rock. And it's not about the options. All right, traders? That's what it really comes down to in the end. You can use that for many things because it comes down to the individual and how they use it, not the product itself. In other words, do we remove all our teeth because wolves kill sheep with their teeth? No. It's not. That's not how it works. And so it's not the options. So using an option strategy depends on how you use the option strategy. You can turn it into, a very conservative strategy, and you will win more than you lose. You go out there and buy something that has a 100% chance, or like a 90% chance of losing, and then expect it to win. Buy a 10 delta option, expiring in 1 month. What you're trying to do is you're trying to bet on 21 or black or something like that. The odds are against you. So it's not the option. And obviously it's always going to be the quality of who you go to do the options. That's what it comes down to. Okay? So that's where my mind is at. That's what I'm saying. I'm saying that. That's what I'm saying. So anyway, look at the Turkish lira. Turkish lira is a perfect example. It's up on our screen right now. Okay? And what it's showing is that the currency goes up and down 5 or 6 handles on any given day, or 3 handles every given day. Could you imagine the euro going from 108 to 204 in a day, and then going up to 270 the next day, and then going back down to 140 the next day? It doesn't make currencies bad. The currencies are not bad. It's the caliber of the central bank and the country and their policies. That's what it comes down to. Currencies are just an exchange, nothing more than that. It's the maniacs running the countries or the individuals running the countries that turn them into maniacs or intelligent or whatever in the end result. All right, anyway, I'm off my soapbox. I'm going back. I'm leaving Hyde Park and coming back to America. Okay, let's go over to the South African Rand. South African Rand. There it is. Talk about crazy. There's crazy. All right, you can see it's been sliding down, and gold has been sliding up. Up and away, and like a beautiful balloon. Right there. And it's been the same time period sliding up. And at the same time in March, with the South African Rand, it's been sliding down. So it seems to be the norm for the Rand and metals all the time. They seem to be pretty consistent, since that's one of their bigger producing things, and since the leadership in that country is doing its best to destroy itself every day. They'll be happy until the leadership in South Africa is like cancer. It's like, wait a minute, you're destroying yourself. You're killing yourself. Why are you killing yourself? I do know. I'm the ANC. I think that I should kill myself. And so that's exactly what's going on there. You can see the only thing left in that country that has any real value is the precious metals. Wouldn't it have been great if the Zulus had taken control, not the ANC and all those illegal immigrants that took control. The ANC represents illegal immigrants. That's all it does. And that's all what do you call it? Apartheid was it was immigration. Total immigration. The crazy liberals inside the African government decided to give them half a vote. The next thing you know, they wanted a whole vote. And look what it did. It destroyed the country. All right. And the end result is that the Zulus, since it can't be racist, because the Zulus always had one vote, because they're indigenous and they are legal residents of South Africa. So how can Zulus always have one vote from the first day of conception of South Africa, and all these illegal immigrants got themselves half a percentage votes over time to make them look fair? And so now we have a currency that's all over the place, making no sense, and the only thing keeping it alive is the precious metals down there, and that's about it. And the Zulus are fighting with the ANC all the time. Support the Zulus. All right. From there, where do we go? That's go to silver. Let's go to silver. And there is Silverado. Silverado making that nice jump. I heard somebody talking about silver a couple days ago. and saying, boy, when silver gets going, it plays catch up real quick. And it did. We went from, in that same March period, we went from 22 to 27. So over that same period, it moved up almost 25%. And gold moved up only, 10, 12%? About 10%. That's about it. So, silver is definitely moving up better at this point. Better. It's the cheap, poor man's gold. And then from there, we go over to copper. Copper, same way. It's up to over $4 a pound again. It's lifting in that same time period. It went from 380 to 422. So that is not even, that's about, 6-7%. That's about it. So it underperformed the silver, and the gold underperformed the silver. And then we'll go over to platinum, which you want to talk about some type of insider trading going on? I mean, like, what? We've seen platinum starting off in March out of this move go to $960 from $880. $80. It was at $880. It got up to $960. Okay. And that's definitely about a 14% gain, which is not bad. So it outperformed gold. It outperformed copper. But it did not outperform silver. And that's why I say that's another one of those. If you get on the lifeboat, if you get on the boat of platinum, you better wear a life jacket, because that baby could go. Let's see now. Let's go to the energy sector. There is, look at that. We're hitting $87. Oil is moving up. There's the constant beat. How many times have I said that there's that constant beat about it's going to try to make the hundreds? Now, I understand that refining in Russia is down over 15%. Because the Ukrainians keep on sending drones over their refineries and blowing parts of it up, and the problem is that it's hard because of the sanctions to get the parts to replace them. So it's keeping them a little slower than usual. They're trying to slow it all down. Climate activists, yeah. Someone should tell them there's a sun up in the sky that we orbit. Climate activists don't think there's a sun. I'm not sure where they think we get the light, but one thing is for sure, they have no idea that we have a star that's only 99 million miles away, 98 million miles away from us. They have no idea that there is a star in our sky. More effective than stop oil. Yeah, really. At this point, it's just one silly game going on that there's no way of describing anything less. So, anyhow, that is crude. Let's jump over to Brent. Well, first of all, put the crude on there, and then we're going to go over to the beta. We'll go to the beta. There's the beta right there. There's the beta, and the beta is showing, shows that, it shows that the oil is up. Let's give it a spin. There it is. Oil is doing fine. You can see days and days and buys, weeks and weeks and buys. Our math has been screaming, be long or be wrong. I like that. Be long or be wrong. Yeah. Woof. Woof. And so then there's the Brent. There's Brent C. Same thing. Blowing through the 90. And it's been in a daily buy for 9 days. And a weekly buy for over 10 weeks. And then let's take a look at the Nat Gas. There's the Nat Gas. And it's been in a sell off and on. What's curious is that the beta shows the Nat Gas in a sell, for 2 full weeks now. But when we go over, let's just show you. Let's show you when we go over to the big platform there and put the Nat Gas in there. And natty gas. There's natural gas. we've been in a weekly sell there. They're saying since like the beginning of February, since the $2 area in this contract in particular. It's had its bumps on the upside and so forth. But when you look at the beta catches those buys and has been more accurate than our big platform. I am working on fixing that code. And then I'm going to go to try to get the data feed out of Dukascopy. Jeffrey has not been able to get around to it. And so I am going back to coding. I'm going to write the Python code to get it straightened out so that the two algorithms update the way our big platform's algorithm updates. All right, traders. We've had too much fun in one day. Oh, and let me go to my girlfriend's stock that Janos talks about right there on right there. And you can see there is the Spanish company. Let's see, we go like that. There it is. There's the Spanish company right there. And it's breaking the $20 area. It's starting to roll over again. Now, how the hell is that doing that? I guess natural gas. This thing follows natural gas. And this thing, look at that. It's been in the cell there for a while. Unknown caller. Unknown caller. Unknown caller. Hello, unknown caller. Unknown caller. Come in, over. Hello, unknown caller.
Hi, I'm calling about solar panels.
About what?
Solar panels.
I can't tell what you're saying. All right, traders. This is Doc from North America saying, happy trails to you until we meet again. Happy trails to you and to our trading friends. We'll catch you all on Monday. Everybody have a safe and smart weekend. And we will have plenty more crazy news from the La La Land here of the United States of America. Ta-ta for now.